folks. 877-927-6648. Now, folks, let's go over to our man, Mr. Ken Shreve, as we do each and every Friday, closing out the week. Get a great update on the first hour. Ken, folks, not only has his own program on TFNN, is broadcast every Tuesday and Thursday, 3 to 4. You can get that live at TFNN, archived at TFNN, as well as iTunes. And, of course, don't forget, folks, you can get TFNN 24 hours a day on any mobile device. And all you have to do is go to tfnn.mobi. It's tfnn.mobi. You hit it, you're off to the races. If you get on, if an Apple device, just go to Apple Store. There's the TFNN app in there that's absolutely free. Now, Ken also has an outstanding newsletter. It's called Ken Shreve's Ultimate Growth Stocks. You'd like to test drive that? Well, come on over at TFNN. You're going to see it right in the carousel. You can test drive that right here, right now. Get it on your desktop on Monday morning. Ken Shreve, what's going on?
Everything's good out here on the West Coast. Tom, how are you?
Good, man. Good, thank you. Well,
so you were in New York for a little while, right? You're back in Florida now?
I was in Boston and New Hampshire, and I'm going to be in New York Sunday night.
Gotcha.
Yeah.
Traveling man.
Yeah, we're having some fun, no doubt about it.
Good deal.
No doubt about it. You've had a busy couple days out here, man. Tell me about it, man.
Well, it's, the newsletter is off and running. I've been, I published my second weekly update this past Tuesday. So, hopefully giving readers a lot of good content. I've made now 3 new initiations in the model portfolio. This is a model portfolio that's been going for a little over a year. So I have several stocks in there that have fairly substantial gains over the past year or so. So what I've been doing is selling some stocks and raising some cash, and then putting new work to stocks where I see opportunities. So just yesterday I had actually a pretty good sell in Priceline. Priceline is a stock that I started a position back on January 5th earlier this year, and if people want to take a look at the chart,
that's amazing.
I bought this stock, when a lot of people, probably wouldn't have thought about buying it, because January 5th was a good, solid, heavy volume breakout day. But this is a good example if you're in the right type of market and you buy a strong stock that's breaking out of a good consolidation. You can ride it for a pretty good gain. So I was in there around $423, and then I outlined, my reasons yesterday for getting out of the stock ahead of its earnings report after the close yesterday. Now, you saw Priceline in after hours. The numbers, as I said they would be, were tremendous. The growth is there, the sales growth, the earnings growth. The company is still firing on all cylinders, but it did get a Goldman downgrade today. So, I got out of the stock yesterday around $540 a share, and locked in a close to 30% gain in that puppy. And then I also made a counterintuitive sell today in ARM Holdings, which is a very big in the mobile chip market. There was a rumor today that their chips are going to be in some of the Apple MacBooks. It's already in the iPad. So ARM is well positioned for growth, but this is a stock that I initiated a position in all the way back on December 31st at about $20.65. So I got out of that one today at a little over $29 a share. Took a nice gain in that stock, and freeing up capital, looking for opportunities in companies similar to Priceline and ARM, good strong price performers in the market that have good technical pictures. And like I said, I've had 3 new initiations over the past 2 weeks, and we'll be looking for more in coming weeks.
Ken, I talk many times about the market gives you a few opportunities to get out. And it's interesting because both of those equities, right, you had the big acceleration up, from December going up to February, and then it's like you start that consolidation, right? So it's so cool that you took that bread, man. It's interesting, isn't it? Yeah.
Exactly. Well, ARM was up, 6.5% today. So I did sell on strength, but I didn't like the volume in the stock the prior 3 sessions. So
hey, you'll like it again when it gets back down to 21, man, and do it again. You stay right there, man. This is Tom O'Brien. This is Ken Shreve. We're going to be right back, folks. Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. If you're looking for a unique approach to the market, consisting of a focused discipline, including risk and money management, this book is for you. It'll allow you to take control of your finances. The Art of Timing the Trade is a complete system for making money, protecting profits, and minimizing losses. Go to Amazon.com now and order your copy of The Art of Timing the Trade.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks, this is Tom O'Brien. I'd like to thank you for listening and supporting TFNN.com. For this week only, you can make 50% on your money. The Tiger Pass program is back. You can buy up to $1,000 in Tiger dollars. We will add an additional 50% to your account for a total of $1,500. This program is good for all services at TFNN.com. It has no expiration date. Want to make 50% of your money? Go to TFNN.com and order your Tiger Pass dollars now. Thank you, folks, for listening and for all your support.
This segment is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Ken Shreve. And don't forget, folks, you can come on over and test drive Ken's newsletter, Ultimate Growth Stocks, right here, right now. That's an investment newsletter, folks. That's what we're talking about. You know, Ken, when we there's nothing like taking money off the table. There's no doubt about it, because then you get some cash in that portfolio. And in particular, I guess, what do you think about this market right now?
Well, the dollar is starting to find a bid, and I think overall the performance today, Tom, with the better than expected jobs number, was a bit disappointing. But you have money coming out of the euro and into the dollar, so it gave reason for the market to close well off its highs today. I still think it's it's not a super easy market to make money. I mean, anytime I initiate a new position in my model portfolio, I know that it's not going to be as easy as it was back on March 24th when we got a good follow-through day in the market. We were in the early stages of a nice move here. There's some uncertainty out there. It remains to be seen whether the dollar is going to continue to strengthen. That could provide some headwind for the market. So my approach to investing, I go out and I try to find companies with super strong balance sheets that are showing relative price strength in the market, and if the technicals are telling me to buy, I buy. And I know sometimes when I buy, the trade is not going to work, and that's one thing. I'm not going to go 10 for 10 or 20 for 20 on stock picks. So when it doesn't work, I do have a disciplined approach where I'm going to be able to tell if the trade is not going to work, and I'm not interested in letting a small loss turn into an insurmountable big loss. So the stuff that I've been working with over the past couple of weeks is working fine, and overall, even though the overall market looks a little bit sketchy here, I'm really not seeing any serious breakdowns in a lot of the stocks in the universe that I cover. So until I start to see, heavy volume crashes through the 50-day moving average or just, breakdowns through key support levels, I don't think it's reason for me to get entirely bearish yet. Just
yeah,
not seeing a lot of
the reality is too. I mean, even if they pull back and the pullback's not that bad, well, you already took some money, so it's like good, and then you just do the whole thing over again, right?
Yeah, exactly. So it's my weekends, as a lot of other people in this business, are spent going through hundreds of stock charts, and when you go through 100 charts, you're going to find in this market you'll probably find 15 or 20 that are interesting, and then from those 15 or 20 you got to narrow that down to to 5, and then from those 5 you really want to hone in and just find the best of the best, and I'm gonna keep doing that, and
nice.
I think just the overall market picture right now is not bad. And I'm
cool.
just going to continue to look for opportunities.
Awesome. Now, you stay right there. We'll grab a couple calls. Let's go to Brian in Massachusetts. Hey, Brian, what's going on?
Taking my call. Glad you got home safe.
Thanks, man. Appreciate it. How you been?
Doing good, thank you. I'm looking at AIG to short it.
You don't want to short AIG. No. Here. You want to short AIG? No, you don't want to do that. That AIG has a short position right now of 25%.
Okay.
Don't short AIG, man.
The only reason I say is they say they're going to price tens of billions of shares, maybe in the mid-20s in the coming weeks. That's the only reason why I say that.
Yeah, don't short it. Don't short it.
Okay.
Okay,
Can I
Brian.
ask you about one more?
Sure, go ahead.
VLO, Valero?
Valero. Oh, this gets interesting. Oh, watch it. I think you might. This one's gonna get real interesting. So Valero, folks. Okay, this little baby. What does it do? Okay, so this is the largest independent petroleum refiner in the U.S. Low's 15, the high's 31, your PE's 12. What you want to do here, and this is going to get interesting. So this had a nice leg up. It went from 18 all the way up to 30. I mean, this is, it was a good leg up, no doubt. Now it's getting heavy up here. Are you looking to short this too, or buy it?
I'm wondering if I should get out of it.
Yeah, I would get out of it. And the reason being is that you're at 26. A natural retracement brings this down to about 24, 23. And
okay.
What you're going to want here, and this is what's pretty cool, is that this is going to end up, I suspect, being a nice buy because, the crude wants to go lower. This had a nice acceleration up, and it probably just wants a natural retracement on the way back. It's not the end of the world, but these refiners will make money hand over fist, man, with oil going down.
I appreciate it. Have a good weekend, Tom. Thank you.
Okay, man. Have a great one. Ken, it's going to be interesting that the dynamic with this oil, like, oil going down, of course, the airlines, some of these airlines are starting to look a lot better. They come off the bottom with some real juice, you know what I mean?
Yeah, I saw the airlines were one of the top performing. They've been a top performing industry group as oil has created. We got a close of oil today. It was strong for a while, and then it closed right around $97 a barrel, something like that, right?
Yeah.
Well, so the lower gas prices at the pump is certainly going to be good news for the consumers because certainly spending $75, $100 to fill up your tank every couple of weeks gets old pretty quickly. So that'll be good news for the consumer, but
yes.
Whether or not that's going to continue to cause buyers to come into the market remains to be seen. I think everybody wants lower oil prices. I was surprised to see oil come down as hard as it did.
That was insane. Yeah, that was definitely insane.
At one point, the oil's, the 50-day line was around 105, and I thought that was, that would probably be a pretty good support level, but it crashed below that pretty easily.
But it's amazing, Pat, when you hear, CNBC this morning, they were talking with a couple of these analysts, and the analysts were trying to talk fundamentals. And Becky was right. Becky says, "How can you talk fundamentals when oil goes down $10 in a day?" I mean, that's trading. Period. That's like insanity. You know.
Absolutely. I'm lucky in that I have about 16 stocks in my model portfolio right now, and I only have one energy name in there that's been a huge price performer. I've got a big cushion in that one, so I may get rid of it in the near term. I've held it for several months, and no commodity exposure at all. So I've been pretty shielded from a lot of the damage that's been done in that market. So
that's a beautiful thing, brother.
So far so good.
That's right. Listen, folks, you can come over to our website. You can test drive Ken's newsletter right now. And don't forget, folks, you can call in and talk with Ken every Tuesday, every Thursday, 3 to 4 Eastern Time. You'll hear him every Friday here at 4:15 Eastern Time, and then on Wednesdays. We're going to be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Hi, folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. Welcome back, folks. We had the Dow finish up 54, NASDAQ up 12, S&P's up 5. We got our man, Mr. Ken Shreve. And, folks, you can test drive his newsletter. It'll be on your desktop Monday morning. Just come over to our website at TFNN. It's Ken Shreve's Ultimate Growth Stocks. Ken, can you just explain to the folks what exactly... I know you're a top-down investor, and what does exactly that mean?
Well, it means I pay attention to what's going on in the NASDAQ and the S&P 500 pretty much on a daily basis, you know, kind of just watching price and volume trends in the market and making sure that I'm buying stocks when I believe that institutional money is coming into the market. Now,
right.
that right now is where things are a little suspicious because, you know, we did have a couple of heavier volume declines this week in the NASDAQ. And, in fact, I was just pulling up a chart on the NASDAQ, and I was looking specifically on April 29th, where you had a 2.45 billion share day, and you can see the Nasdaq was only up 1 point on that day. And
okay.
When you get a breakout, which the Nasdaq recently did, you know, it went over a swing point,
yes.
And then you start to see. I mean, on April 29th,
wow,
it was
look at that. Yeah.
It was unequivocal what is called churning action. So you got heavy volume with no further price progress. And this is, it's kind of a technical no-no. And not surprisingly, you know, the Nasdaq was only up 1 point on April 29th. Again, volume was above average, much higher than it had been in recent days at 2.4 billion shares. And then after that, you know, this week you had a couple of heavier volume declines in the Nasdaq. Today, there was really never much volume in the market. Even when the jobs report came out, it was much better than expected. Volume was tracking lower pretty much the whole session today. But you know, you had a close near the low today for the Nasdaq. You know, I mean, if the dollar continues to strengthen, we could see some softness in the market, but I am a big believer in this economic recovery. I think it's going to be an overall good year for the market. But you know, if you continue to see some professional selling next week in the market, that just tells me to keep my powder dry.
Sure.
And you know, if I don't feel comfortable putting money to work, because I think the chances, you know, most stocks are going to go down with the market, a good stock or a bad stock. So,
right.
That's basically, you know, my top-down approach. You know, the market basically tells me when to be aggressively committing capital and when not to be. So right now, I'm not being aggressive, but you know, looking for, you know, strategic opportunities, I guess you could say.
Well, no, and it's really cool. I mean, you know, you just took capital off the table, and preservation of the capital is dynamite. You know, that's the bottom line. You know.
Yeah, and really, you know, right now I think I'm about I don't know, maybe 55-60% in the market. So you know, I've definitely had a defensive approach, but that doesn't mean I can't go on offense at any time. But right now, you know, just with the distribution that we saw in the Nasdaq earlier this week, and no reason to be looking to get 80-90% invested anytime soon. You know.
Yeah. You know, it's going to be interesting, particularly, I guess, all over the country. But I know, you're in California, and people drive so much more in California. I mean, you have to. That there's going to be a lot of money saved out there, man. You know.
Yeah, no, for sure.
Yeah.
And I think, again, I think that lower gas prices are probably going to be here for a little while. I don't expect oil to start racing back up to $115, $120 a barrel anytime soon. And then economic data going forward, I think that we're going to continue to see modest job growth. If we can see 150, 200,000 jobs created every month from here, and retail sales next week, I'll be watching that. A lot of these retailers are hanging in there pretty well. So
yes,
I think there are reasons to believe that this economy is going to continue to get better this year, and with solid corporate earnings, I think that's a pretty good recipe for a good year for the market this year.
Absolutely. Listen, folks, thanks for being here. You know, you can test drive Ken's newsletter. And don't forget, folks, you can listen to him every Tuesday, every Thursday, 3 to 4 on any device. Ken Shreve, you have a great weekend, safe weekend. Of course, look forward to speaking to you next week.
Okay, same to you. Thanks a lot.
Stay right there, folks. We're going to be coming right back.